I am very pleased to be here with three of the most impressive, most important, and most knowledgeable and informed, and I am not exaggerating, crypto policy advocates in the world. Again, not exaggerating. And I'll ask them to introduce themselves and talk a little bit about where they work. But just to level set, we have representation at the top level from the three main crypto trade associations. So truly, there is no one who has been deeper on all the issues that we've been talking about and the issues that matter for Hyperliquid than these three. So I'll ask them to start out by introducing themselves and then maybe saying a little bit about where they work and the trade association they represent.
Awesome. Thank you, Jake. I'm Lindsay Fraser. I'm the Chief Policy Officer at the Blockchain Association. The Blockchain Association has over 100 members who are US based companies building in the blockchain space. And what we do is try to advocate for them on Capitol Hill in DC to ensure that we have clear regulation that will allow our companies and builders to continue to operate here in the United States.
It's great to be here. G. Kim, CEO of the Crypto Council for Innovation. We're a global industry association. We operate in US, federal, and state, in the United Kingdom, in the EU, and the standard-setting jurisdictions of Asia Pacific. We use an evidence-based approach to work constructively with regulators and policymakers around the world to help shape innovative and responsible regulation for our industry.
Thank you, Jake, first and foremost. Thanks, Hyperliquid, for having us today. It's an incredible venue. It's pretty impressive. I'm Cody Carbone. I'm CEO of the Digital Chamber. We represent about 250 companies in Washington, a global membership base, and a pretty diverse membership. So not just your crypto native companies, but some of your traditional institutions as well, advocating for digital assets and blockchain, clear rules of the road with the ultimate mission of mass adoption.
Awesome. So let's jump straight to the topic of the day, which is, for better and for worse, the Clarity Act, something that we have been talking about pretty much nonstop every day for a year and a half, or maybe like 8 years if we count all the other market structure bills that we've worked on. And I guess I'd love to start with Cody, just to level set for folks who haven't been following this as closely as we have. Can you just tell us a little bit about what is the Clarity Act? What's in the bill? What does it do?
Sure. And it's fascinating timing, as you mentioned, Jake, and to be here with my colleagues as we're all talking about this behind the scenes, as there's breaking developments right now of what's going on. So the Clarity Act is a behemoth of a bill, a legislative effort of almost 300, 400 pages. And what it does is it really creates the foundational framework for how to regulate digital assets in the United States. It divides two different agencies that will have clear jurisdiction, the SEC and the CFTC. It creates a digital commodities framework under the CFTC. And for the first time, it tells token issuers, here's who your regulator is. Here's what you need to do to be regulated in the United States. Here's what your token is. What are you issuing? There's a token taxonomy framework. And here's what you need to do to make sure that people can invest in your token safely. Same thing if there's a listing platform. It tells you who your regulator is for the first time. Is it the SEC? Is it the CFTC? What are the tokens that you're issuing? How do you get licensed in the United States? We haven't had this framework for a long time. It's caused chaos. You've probably heard regulation by enforcement from the previous administration, where there's been so many questions about what is a specific asset. What is a specific token? Is it a digital commodity? Is it a digital security? Is it a digital tool or something else? Who is the primary regulator? Is it the SEC or is it the CFTC? The goal and intention of the Clarity Act is to answer all of those questions. So if you're going to invest or build in the United States, you know exactly what to do to comply and you can actually grow and succeed here.
It's a great summary, and I'll just add one Hyperliquid specific point, which is that, and Cody mentioned, the bill is focused on spot digital assets. It is not focused on derivatives. In fact, it has very little effect on derivatives overall. And so this is not as high priority for Hyperliquid, at least from the perspective of onshoring markets for perpetuals, as it is for a lot of other projects in crypto. That's not to say it's not important or doesn't help in many ways, but a little bit of a different position for Hyperliquid than for others. With that, I want to turn to Lindsay just to talk a little bit more about what is going on with this bill. Tell us a little bit about what the sticking points are, why we haven't gotten this done yet, and what's holding it up.
Yeah, so I think right now we can boil it down to kind of three buckets of issues that are still outstanding. First, we have what we call an ethics provision. So obviously, the current administration has been involved in the industry, and I think Democrats are wanting to add some sort of check into the bill that would apply to elected officials. And so that is actually, I think there's a meeting happening in about 20 minutes at the White House with President Trump to finalize what that ethics language will look like. But ultimately, that is a gating issue to get any Democrats to vote in support of the bill. And as a reminder, to get any bill out of the Senate, you need 60 votes. So we'll need at least 7 Democrats to vote in support if we want the bill to advance. After ethics, the agriculture side of the bill. So the side that looks at the CFTC and revamping kind of their registration regime and authority over digital assets. There's a few outstanding issues there that are still being ironed out, but I think are in the final stages, some of which pertain to federal preemption, for example, so that the CFTC's authority can preempt different state regimes that are in place. I know Republicans and Democrats have been at the table all week trying to get to a solution on that, and we really feel that it's in the home stretch. And then I would say kind of the last outstanding issue is what we would call developer protections. So there's a piece in the bill called the Blockchain Regulatory Certainty Act, which we view as a core protection for developers. It says if you are a developer who is developing non-custodial, non-controlling software, then you cannot be found criminally liable for operating an unlicensed money services business. That sounds simple probably to everyone in this room, but there have been developers, across the board, many public cases, including Roman Storm, but also investigations that were not public that went on for years and, tens of millions of dollars to fight back potential criminal charges for developing decentralized technology. And there's been a little bit of pushback on the developer protections piece, I think, from those who are still kind of wrapping their head around what DeFi really is. We've seen some law enforcement groups raise concerns about the developer protections, thinking that it could somehow be used potentially as a loophole for illicit activity, which we all know is not true the way it's written. There's no impact on the ability to go after fraud, money laundering, etc. So we've been spending a lot of time with those groups, and but the developer protections piece remains critical. And if that gets watered down leading into the floor vote, I think that's going to make it tough for some of the industry to support it. So we've been working very hard on that, but I would say it's still an outstanding issue.
Well, I really appreciate all the work that you've been doing, all three of you, but Lindsay has been spending a lot of time on this law enforcement issue because obviously the bill won't work to create market structure for crypto in the United States if it's illegal to be an infrastructure developer like Hyperliquid Labs in the United States. So absolutely critical that we make sure that developers are not misclassified as money services businesses or intermediaries. Moving over to G, give us a little bit more of the sort of the inside baseball in DC. Everyone's been watching the conversation around this bill for so long. It seems like time is starting to run short. Just tell us what we should be looking for, what the timeline looks like, what happens next.
Yeah, it's a multi-step process going forward, so please bear with me. I want to avoid being in the weeds on arcane Senate procedure. So 6 steps that I'll highlight. The first step that we're all waiting for is the release of the merge text. So take a step back. Right now in the Senate, you have 2 components of the market structure text. The Senate Ag portion, Senate Agriculture Committee has jurisdiction over the CFTC, and the Senate Banking portion, Senate Banking has jurisdiction over SEC. So these 2 portions of the text have to be harmonized. We're expecting that to be released as early as today or possibly early next week. Once that's out, Senate Majority Leader Thune will file what's called cloture. That pretty much is a step in the Senate where you limit the time to debate on a bill. You need 60 votes to invoke cloture. And I highlight that because we need this bill to be bipartisan for many reasons, but one of which to invoke cloture to move things forward. Assuming we get 60 votes, the next step will be to go through an amendment process on the bill. With the amendments, you need simple majority, so 51 votes to get the amendments through the portion, that process. And then afterwards, you then need to go through actually voting on the final passage of the bill, which you again need simple majority of 51 votes. Now, before I go into the next steps, including the House, I'll highlight one thing. The release of the text is a pretty significant step here because that will serve as a forcing mechanism, especially when you have a date certain on the floor vote, to push stakeholders, Republican and Democratic senators, to try to close out issues as soon as possible to move on to the next step. Now, assuming if and when the Senate passes the bill, it'll go back to the House. Take a step back. Last year, you all may recall that the House passed their version of the Clarity Act in overwhelming bipartisan fashion. That's why we're going through the Senate process now. Once the House receives the bill, they have to pass an identical version of the bill before they can send it to the president for his signature and for it to become law. Now, Jake asked about timing. The timing is getting tight. So right now we have the month of July, but the House will start their recess July 27th, which means they go home until mid-September. The Senate will go into recess end of day, August 7th. So in a perfect world, the Senate passes the Clarity Act with enough time for the House to receive it, go through their process before they go on recess to send it to the president's desk.
All right, well, I guess it's going to be a tense time for all of us watching this process play out, but thanks for laying it out, and we'll see where it goes. To conclude the discussion about the Clarity Act, I want to play DC's favorite parlor game, which is what is the % chance that this bill becomes law this year? So we can go quickly, but Cody, G, Lindsay, give us your percentage. What is the chance that this bill becomes law this year?
I really wish I could have gone last. I am more optimistic than most. I believe it's 60%. I think it comes down to whether Democrats actually want to vote for this or not, because I have never seen. I mean, I guess it somewhat resembles the Genius Act negotiations, but every single Democrat you talk to, not every single one, the ones who have been working on this, the Republicans who have been working on this that you talk to, the Treasury Department, the White House, they're all motivated to get this done, and they're all saying the right things that we can get this done over the next few weeks. So I feel good. I'm going to remain optimistic. I think 60%.
So I'm gonna go one step higher. I agree with Cody's optimism. I'm going around 70%. I feel confident, I feel optimistic and hopeful, and it's largely driven by the same reasons as Cody mentioned. But last week, Congress was in recess. The staffers have been working around the clock. The work has not stopped. There is a real desire and commitment from both Republicans and Democrats to try to get this bill done. People recognize this is of national paramount importance. Like when you look at the world, you have other jurisdictions like the EU, they're done with their transition phase for MiCA. The UK, they're going to start their commencement process in 2027. In Asia, you have Japan, Singapore, Hong Kong, all with the regulatory framework. So unfortunately, our country is lagging behind, and members of Congress recognize that. So I'm an optimistic person. I'm a New York Knicks fan. We just won our championship here in New York. So I'm going to follow the optimism and say around 70% to get this done.
I'm similarly optimistic, but I think I might settle around 55%. And that being for a reason that has nothing to do with crypto itself. But I think this ethics deal that's becoming increasingly important and the focus of the negotiations, the meeting that's happening today to finalize language does not have Democratic sign off yet. And so I think the discussions will obviously continue over the weekend and into next week. And that's an area where us as, crypto policy experts are trying to, I think, stay out of the fray there. But I feel optimistic more. I think there's more of a chance that it passes than not, but I'll hedge it a little bit depending on the outcome of the ethics discussion.
Excellent. I love the optimism. I want to share the optimism. I'll take the moderator's point of privilege to give you my number, which is closer to 20%. I totally agree with the analysis, everything that my fellow panelists said. I just think we're running out of time. And there are so many difficult issues in this bill, and Congress has been working on it for a long time, but many senators have just really started to think deeply about it, and new issues come up every single day that make it really hard in an election year to get a bill like this done. So I would love to share the optimism, but someone has to be a cynic, so that's me today. Great. Well, let's move on from talking about Congress, and let's talk about the agencies, the CFTC and the SEC. And to set the stage just a little bit before we get deeper into it, as I was just discussing before the panel, the agencies really have the bulk of the work cut out for them to figure out how we onshore markets like on-chain perpetuals on Hyperliquid. And that will be true whether or not the bill passes. If the bill does pass, it calls for an extraordinary amount of rulemaking that may take years for the agencies to do. And if the bill doesn't pass, then the agencies are going to have to do their level best with the statutory authority they already have to try to fill these gaps. So the agencies really are key, regardless of what happens in Congress. So why don't we start with Cody? I know the Digital Chamber has been engaged with the CFTC. I'd love for us to start there and maybe just tell us a little bit about what the CFTC has been doing and what you expect to come next from them.
It's really fun to see what a DGen as a chair of a major agency can do. And Mike Seelig is a former Digital Chamber member, and he is the foremost expert on digital assets. Now, prediction markets is taking a lot of time. Perpetual futures, which I know is huge for Hyperliquid as well. And so they have been very active on really those three specific areas. It was in January, shortly after his confirmation, that Chairman Seelig said, hey, we want to bring perpetual futures to the United States. All of that liquidity that is happening offshore, let's bring it in to the United States. And then it was about several months later, I guess almost 2 months ago now in May, at the end of May, when he said CFTC released the order to allow for Bitcoin perpetual futures with Kalshi and Coinbase. And you've already seen the evolution and the effect of that. Shortly after, you see Kraken offer it through Bitnomial, offer perpetual futures. There is a real boon happening here for this industry, and they're always thinking about at the CFTC, what can come next? What is the innovation that's going to affect the markets that we should be taking a hold of? That is a different mindset than most regulators in Washington for a long time. Most regulators in Washington over the years are very risk adverse and say, okay, how do we make sure that we're not hurting the capital markets, hurting the financial system, but they're never thinking much about how can we continue to explore opportunities for investors, opportunities for institutions. After the order in May to allow Bitcoin perpetuals, we saw a lawsuit just about last month from the CME. That'll be very interesting to see what happens. It's ongoing litigation. The CME saying that, hey, we don't agree with the CFTC that perpetuals are futures. We believe that they're swaps. There is a different regulatory treatment, a more burdensome regulatory treatment if they are swaps. There's also a more favorable tax treatment if they are futures. So this will define a lot. There's a lot of ongoing litigation with the CFTC right now, perps being a big one. Prediction markets is a huge one. That's going to be the next real area where I see not only litigation and rulemaking, but also probably legislation. There's several already proposals out there on how to regulate prediction markets, what type of event contracts should be allowed. Are these even event contracts where the CFTC already has jurisdiction? So they're having their hands in a lot of different things. It's probably the most we've ever heard from the CFTC in the history of the agency since the passing of the Commodity Exchange Act in 1970. And Chairman Seelig is by himself. He has got an incredible team. It's a star-studded cast that have come from private sector that are experts in their field, but he is the lone chairman and there is no commissioners at the agency right now. So if we pass the Clarity Act, and you're going to have, I think there's almost 50 rulemakings in the bill. There's a lot of role for the CFTC. There is a lot of resources that are going to need to have to go to that agency for them to continue to be as effective. But I can promise you that the chairman will be very, very active. He's already shown it, and a lot more to come.
And if you don't mind, just a quick follow-up question on that, Cody. I think the point that you just made is really important about the size of the CFTC as an agency in comparison to the size of the regulatory challenge that they're being asked to take on right now. And maybe just talk a little bit more about the relative perception between the SEC and the CFTC historically, and what the challenge is for the CFTC now, why it's becoming so much more important as an agency.
CFTC has historically been little brother to the SEC. I laugh, and I probably shouldn't, but every time I go to the CFTC headquarters, they're cast far away in DC. They're in Foggy Bottom when everyone else is near Capitol Hill or near the White House. And they share their office with, I think it's like an eye doctor, maybe a CVS. And that's just illustrative of how historically DC has perceived the CFTC. The CFTC has regulated or had in Congress, its oversight is from the Senate Ag and the House Ag committees. Not typically big committees that people think of capital markets, usually just known for agriculture, the Farm Bill, and things like that, commodities typically. So the CFTC has not received just a lot of attention overall over the years. In comparison to the SEC, who I think's budget is almost 10x the amount of appropriated dollars from Congress to the SEC or the CFTC, 10x. They have a nice shiny office in DC, a massive office right next to Union Station. There's a lot of attention. Their oversight of the SEC is the Senate Banking Committee and the House Financial Services Committee. It's just illustrative that the CFTC does not have a lot of resources to do this. And the fact that they don't have any other commissioners, I don't know how they're going to do this. They have a lot of fights that they're facing right now. They don't have a lot of staff overall. There's been a ton of turnover from previous administrations. There's not a lot of regulators in DC as a whole right now in comparison to previous administrations. There has been a lot of cuts, a lot of buyouts. They are going to need resources to be able to regulate the digital asset markets. And then when you throw on perpetuals, when you throw on prediction markets on top of that, they need more appropriations.
Yeah. I really appreciate you diving deeper in that. And I think it is a testament to Chairman Seelig and how effective he's been, that he's been able to tackle so much when he's, frankly been given such a huge challenge with such limited resources. So I think it'll be interesting to see, what happens moving forward. Let's shift gears away from the CFTC and talk about the SEC. And I'd love to pull you in on this. The SEC hit the ground running earlier than the CFTC because Chair Atkins took his position quite a while before Chairman Seelig did. So they've been at it for a while doing work on crypto. So maybe tell us a little bit about what has the SEC been up to and what do you expect to see from them next?
Yeah, there's been a lot of activities since Chairman Atkins took on that role. We've seen a sea change from the prior SEC administration, of course. The industry's been asking for guidance and clarity for many years now, and we've received it. There's been staff statements on, for example, certain staking transactions not being securities transactions, front ends not being brokers, and what that means and what the conditions are for that to be the case. We saw the SEC with the CFTC come out with a joint taxonomy, a guidance on token taxonomy on digital collectibles, digital commodities, tokenized securities, and much more. So it's been a complete change from the prior SEC administration. What I'm actually the most excited about is what comes next. There's a lot of things that CCI is looking out for. Of course, we've all been talking about the innovation exemption. I do think that timing is going to be a little bit more delayed than we all anticipate, but we expect there to be certain limited exemptive relief for tokenized securities trading on automated market makers. Regulation crypto, I actually think that's going to come out first before innovation exemption, and that's going to allow crypto entrepreneurs to raise capital through the selling of crypto assets, as long as you have tailored principles-based disclosures. There might also be a safe harbor for investment contracts and what that looks like when you no longer have to rely on the entrepreneurial or managerial efforts of someone. It escapes the security or investment contract status. And also vaults, non-custodial structures that allow for the aggregation and deployment of digital assets. Chairman Atkins, I think it was a few weeks ago, came out with a speech where he basically said, this is going to be a prominent focus for the SEC. Are there touch points to the Securities and Advisors Act? What does that look like? The last thing that I'll say is Commissioner Peirce, who we all love dearly, who has been a great champion for our industry for many years. Her term is coming up. I believe it's in the fall where she'll step down. So I mentioned that, and this is not a substantive comment, but I think before she leaves, we should expect some positive fireworks for industry as well. So that's where my anticipation excitement comes from for the next steps here from the SEC.
I couldn't agree more. And Commissioner Peirce has been such a great champion for this technology and for everything that it represents. It's a shame to lose her, but it'll be exciting to see what happens before and after her tenure. If you don't mind just double clicking on one point that you mentioned, I think it's interesting to talk a little more about how different this SEC is from the prior SEC. And for folks who don't follow this as closely as we do, it may be a little bit shocking just to understand the transition from the Gary Gensler regime to the Paul Atkins regime, the creation of the crypto task force. So just curious if you'd weigh in a little bit on that.
It's an excellent question. in the prior SEC administration, unfortunately, it was very much, we like to call it regulation by enforcement. The industry would ask for clarifications, guidance on how to comply with the rules. What is a security versus not when it comes to crypto assets? We received none of that. Instead, the industry had to sue the SEC. Multiple companies in our space were sued by the SEC enforcement actions across the board. It's been a complete sea change with this administration at the SEC. The crypto task force has been openly meeting with industry, seeking our feedback, asking thoughtful, substantive questions about what they should focus on. It comes straight from the top. If you watch and read all of Chairman Atkins' speeches, you understand and we see that he believes in the future of on-chain markets, the need for US lead on crypto innovation, and it started from day one for him. So for the industry, we're grateful. We just want a fair shake when it comes to all of these things. We want to understand what the rules are. I think all the different crypto businesses in the world and in the US, we want to know what the rules are so we can build products, services, for our customers in a safe, compliant manner without being afraid of being sued by a regulator. So it's been an absolute sea change in the positive for our industry with this SEC in particular.
Yeah, absolutely.
Jake, can I add one thing?
Please.
And that's why we need a bill. We hear it so often. I talked to some of our member companies like, wait, things are going great with Chairman Atkins and Chairman Seelig. Do we really need a bill? We love what's coming out in terms of agency guidance or in rulemakings. If you're building in this space and you really want to invest in building in America, you can't have these 180s every 4 years. What can happen? Who knows what's going to happen in the 2028 election? If you get a Democratic administration or even a Republican administration and they're not as friendly to digital assets and blockchain, you have an SEC chair that looks a lot like Gary Gensler, says, I think these are all securities and I'm going to stand with that. Then we go right back to where we started, because the things that agency chairs can do on day one is rescind all of that guidance right away. Durable law that can stand the test of time, that is really hard to overturn. That's why we need a bill, to make sure that if you're building in this space, you can have comfort, not just for the next 4 years, but for the next 4 decades.
What I agree completely with Cody. One thing that I'll highlight as well to build off what Cody said is Clarity Act, sure, it definitely benefits the crypto industry. We want rules, we want clarity, pun intended. But even if you're a bank, even if you're a non-crypto native company, you should want this bill. There are sections to allow for bank permissibility and the clarity that Cody just mentioned. We are seeing more traditional financial institutions come into our space. And the way for them to stay in this space and continue to innovate with digital assets and blockchain is through market structure legislation. And we need something that is durable, as Cody mentioned, so that we don't face regulation by enforcement down the line in a different administration.
Well said. Durable policy is the goal, because we can't have an industry where every 4 years the rules change dramatically. So I totally agree. And on that point, there's something else that I think has changed quite dramatically, but in a positive way since the last administration. I'd love to get Lindsay to jump in on this, which is the relationship between the CFTC and the SEC. And historically, that relationship has been quite difficult, and things have changed a lot. So Lindsay, could you tell us a little bit about the relationship between the agencies and what they're up to?
Yeah, definitely. I think similar to what G was talking about at the SEC, we've also seen a 180 in the ways that the SEC and CFTC interact with each other. I think during the previous administration, you had a chair at the SEC who was arguing that all of these tokens, most of the industry fell within his jurisdiction, which wasn't exactly a view that was shared by the CFTC. So I would describe the interaction between the two agencies as competitive more than anything else. And I think what we've seen over the past couple months in particular is an unprecedented level of collaboration between the two agencies. It's also helpful that before becoming the chairman of the CFTC, Mike Seelig helped to lead the crypto task force at the SEC alongside Chair Atkins. Before I was at the Blockchain Association, I led policy at Uniswap Labs, and we spent a lot of time with the SEC and with Chairman Seelig, who was on the task force at the time, and he really was leading kind of what I think now has served as the foundation for what an innovation exemption should look like. And I think similar to G's points, he was reaching out to companies, trying to learn their technology, which was completely different than what any kind of US based company experienced in the past 5 years. And so I think with him moving over to the CFTC and already having that really strong base knowledge of the SEC's jurisdiction and also very strong relationships with both the chairman and the crypto task force, it's been a very seamless integration. I'm sure behind the scenes there's a little bit of trickiness to it, but they make it look very easy the way in which they coordinate. I believe it was in May, they signed a formal MOU to announce their collaboration and further partnership, which again is unprecedented compared to and unimaginable compared to about 5 years ago or even more recently. And we've seen them start to partner on policy and regulatory efforts as well. So I think G mentioned there was a token taxonomy put out by the SEC, I believe in March, and the CFTC, while it was primarily focused on how securities laws apply to certain tokens, the CFTC signed on to the interpretive guidance in support, saying that we agree with and understand these definitions, which again is really critical when you're dividing the regulation of an industry into two different regulators. It sounds simple that they should agree on baseline definitions, but that has been the whole issue over the past up until now. And we've also seen them partner on upcoming regulations, RFIs. There's one about portfolio margining right now that it's joint SEC and CFTC. I don't know this for sure, but I'm not sure we've ever had joint guidance on crypto between the two agencies before or an attempt at a joint RFI. So I guess to answer your question in full, Jake, I think the collaboration between the two, one is unprecedented, but also I think will lead to the best outcomes possible for the industry.
Fantastic. Well, good sign, regardless of what happens in Congress, that we're in good hands with the regulators. Well, seeing that our time is coming to a close, I'd love to end by asking each of you to weigh in on, generally speaking, what you expect to happen next in DC, thinking about maybe a timeline of the next 6 or 12 months. What should folks who are paying attention to crypto policy be looking for? What are you focused on when it comes to perpetuals, on-chain markets, Hyperliquid, or whatever you think is most interesting? And maybe Lindsay, we'll start with you.
Yeah, I think over the next 6 months, ideally, we will be through the Clarity Act. And I think, regardless of whether the Clarity Act passes or not, we'll either be starting the process of all the rulemaking associated with the Clarity Act, which will be no small feat, or we're continuing to see further and further guidance, notice of proposed rulemakings, and other opportunities to engage directly with the industry. And I think, an ask for anyone here with, equities and onshoring this type of technology, whether it's around perpetuals, around different types of decentralized technologies, I think we have a really big opportunity in the next 6 months to continue to heavily engage, both on the rulemaking front and with the agencies themselves, to explain what people are trying to build and what are those blockages when they're trying to do so in the US. We have we have Congress and we have agencies who are more willing to listen than they ever have before. But it requires engagement and sitting down and explaining kind of why this technology is going to underpin the future of finance. And so I think we'll get continued engagement and hopefully we'll have a bill done in the next 6 months.
As Lindsay mentioned, and I'm sticking with my 70% prediction, but when clarity passes, the work just begins, in my opinion. There will be a lot of rulemaking for the CFTC. It'll be what are the registration requirements? When does provisional registration end? What are the clear business conduct standards that exchanges like Coinbase, Kraken, and others will have to comply with? SEC disclosures, asset classification, and much more. And if clarity does not pass, for whatever reason it may be, the rulemaking, as we talked about, the agencies have been extremely busy. We should expect a lot more. I also expect traditional market incumbents like exchanges and clearinghouses to figure out ways to improve their tech infrastructure through on-chain execution and settlement. I also think with the CFTC, they will focus more on what can perp futures be referenced off of, like, for example, energy commodities. And I think sticking with the premise and the theme that we've experienced of the SEC, CFTC working more together, security-based perps is also being developed. So will we see CFTC, SEC working together on this as well? Lastly, tax. Tax has been extremely busy for our industry as well. There's been 7 different tax legislations from the House throughout this year. We had a full legislative hearing for the first time as well. We expect tax to be extremely busy on issues such as staking, wash trading, and de minimis, and much more on gas fees. So I think the fall will actually be very, very busy on tax.
Agree with everything Lindsay and G said. I would add maybe, well, not DC specific, but follow the litigation, especially in the perp space. The CME versus CFTC suit, that's going to be massive for what the future is of perps in the United States. Tax legislation will be critical. You can't be U.S. can't be the crypto capital of the world, even if you pass clarity, if you don't have clear tax legislation. So that will be massive. And it's great to see that finally lawmakers are taking that seriously, and it's a bipartisan effort. I would also encourage everyone, when you want to look at what's next, look at the White House crypto regulatory Bible that they put out a year ago. I'm forgetting the exact name, but there's a list of about 100 recommendations across tax, cybersecurity, securities, commodities, in that they either encourage Congress to take on, which might be a harder lift as we're going into an election at the end of this Congress, but also different things that the agencies can do unilaterally. Over 100 of those recommendations, a lot of them are still underway or have not even been addressed yet. So look to that to see what Washington will do next.
Absolutely. Well, I completely agree. I have nothing to add to that. So I'll close the panel by saying I once worked at a trade association. It is an absolutely critical, but also very difficult place to work. It is so important. And the work never stops because these folks have to work on literally every single issue that affects their membership. So thank you so much. And I'll say it is often thankless work. So I want to be one to say thank you so much for all that you've done. HPC is very proud to be a member of all three of these trade associations. And anyone who wants to get more involved in policy should absolutely talk to these folks and think about joining. So with that, thank you all very much. And thanks for listening to the panel.